Good afternoon, everybody. So, thank you very much, and I will ensure that this is a pure learning session because all of you know me as somebody who loves teaching and who loves empowering knowledge. So, I prefer to be standing. So, because too much of sitting, sometimes takes care of my back. So. These people needs no introduction, so I will not waste time giving what I do because all of you know me. So we have a set of 8 to 9 questions. Again, they are all yours. Kahin pe bhi, if you think that you need to ask any questions to them, you can stop me and you can ask them, because I have personally chosen all these 5 people because I think they are the experts. Or alternates में it is very important for you to learn from the experts. Over the last 20 years, आप लोग mutual funds, you have been doing mutual funds, but for the next 10 years, we are going to provide you the basic knowledge. So, I don't want to waste time. Ananya, the first question is you. Too much of mutual fund sahi hai. But what differentiates alternates from traditional products like mutual funds and other products? Why PMS? Why alternates?
Good afternoon, everyone. And I think a great question. And that takes me when I was starting my own career, say around 30 odd years back. And that was the time we were talking about what is mutual fund. So, so the last 30 odd years, we have progressed from talking from what is mutual fund to what is alternates. And getting into the constituents of alternates to talk about why PMS. Rather, first of all, what is PMS? And now even we have started questioning why AIF? Even forget about PML, let's talk about AIF now. Now this is a journey, and the journey has come in obviously with a lot of things at the background. One of them has been the ability of our investors having a disposable incomes, and hence their ability to take the risks become that but much more. And when you have an ability to take risk, you would want to see a differentiator. And that came as an originating factor for the PMSs, wherein the constraints that you could see on a mutual fund because of the regulatory regime, you could actually go ahead and try it out in a little unconstrained fashion. But the PMSs had its own challenges with a demat account needs to be opened, the taxation being huge challenge, short-term, long-term capital gains at every folio level, so on and so forth. And then someone thought, can we ease it off further? Which is where the whole thought of AIF, wherein rather than getting into the PMSs or a client's own demat account, I can take a pool approach. And while doing so, I'm also making it very effective, because the taxes are all getting consumed at a fund level, and the proceeds that comes into the investor are net of taxes. This being one of the, obviously from an operational side, this was a great incentive for someone to look at it. But what it did further, it allowed managers to be a little bit more innovative, can apply their ideation. Like, for example, I can have a combination of listed, unlisted. I can have a concentrated bets. I can have a long shorts. I can do private equity. I can do performing credits. I can do a lot that I can think of. And as you would have seen when Raghav was presenting the case, he did mention about the 4 large segments where we are operating ourselves. Listed, and the listed itself has comprises of mutual fund, PMS, and an AIF. But if you could go further, there was a private equity, there was a performing credit, there was a real assets, further into InvITs, REITs, so on and so forth. So the whole, the gambit which gets offered to you through an AIF and the execution simplicity, I think these became a very formidable reason for someone to start looking at AIF. Obviously, with a caveat that 10 million happens to be the minimum ticket size. And as one of our friends just mentioned, that is also getting now, the amount is getting reduced. That's my
Brilliant. I think as we keep diversifying risk at various points, one of the purpose of AIF is also to diversify risk. So my next question is to Aparna. Aparna, you represent a brand, who has a wide range of presence. You own a bank, you have a mutual fund business, you have securities. So which according to you is the emerging trend? Because आप capital भी provide करते हो, आप risk भी manage करते हो, आप fund भी manage करते हो. So which is an emerging trend in the AIFs? मतलब if somebody, a distributor is going to the client, what he should speak, what is that he should carry with him so that it resonates with the requirement of the industry?
Sure. Thanks, Romit. Very interesting question again. Because we have seen the industry has grown, obviously, having commitments of close to 12 lakh crores, over 12 lakh crores, which is as per the latest SEBI data, and closer to say 78, 79% being in the category 2 space. So that is clearly a category which investors have also embraced, because that's the category which has seen maximum amount of commitments there. So I think that's a category which needs to be focused on. And like people have highlighted, whether it's say a private credit space, which has become very, very attractive for investors given the way taxation change has happened, and also given the way that there is a potential for investors to earn maybe higher yield by investing in this category. So that's a category when you are looking at allocating in the debt space, I think from a diversification perspective, this category can be looked at. Similarly, on the unlisted side, again, people have had very good experience on the listed equity side. So unlisted equity, which is maybe a step prior to when the company becomes actually listed, maybe N-1 stage before the IPO. That's also a stage. Growth equity, late stage is another space when an investor is looking to invest into. I mean, these are things which have become popular, which should be part of investors' kitty. Obviously, in the equity space, only in the equity allocation space. Also, category 2 also has real estate products, but we need to be mindful. Again, there are products on the real estate side which can be either in form of, say, a structured credit or a private equity as underlying. But I think two things there. One is obviously the risk which comes with unlisted equities, and the other is a sectoral level risk. So if your investor has that appetite and is looking for diversification, I think these are the categories which you should be focusing on.
Very brilliant. Unlisted space and credit is one such emerging space, and I can give you a small idea. Recently, very large family offices, they connected with me and said that, Romit, we do 500 crores of FD every year. 500 crore का हम लोग FD करते हैं हर साल. And, we want to sit with you and understand that how can we make more out of this FD, correct? Because with this so much of AIFs coming in, can we explore other asset class? Now, all of you also have a lot of clients who are investing into FDs. So you can sit with them and understand that how can you help your clients who is investing into FD can actually move into credit. Because after all, everything revolves around the same thought process. So now my next question is to Abhishek. Abhishek, these are all mutual fund distributors, correct? And they are graduating, like class 10 ka exam, abhi class 12 graduations jayenge. So while Ananya and Aparna has given a very good insight about why AIF, which part of the AIF. How do they position AIF? A lot of people, they are getting certified, but they are not being able to take that first discussion with the client. Client 1 crore dene ke liye baitha hai and he is starting with a balanced advantage fund. And client is writing me on WhatsApp, agar mutual fund hi lena tha to isko kyun bulaya tum? So where do they position this product? How do they position this product?
Okay. First of all, thanks, Romit. Thanks for having all of us here on the stage. And I think thank you for the audience for turning up on a Sunday. Very relevant question. In fact, we have been in the PMS business for some time and we have launched alternate category 3 just about last year. It's been exactly a year that we have completed it. And when we meet people, this is exactly the question. They said, जब सब कुछ same ही है, तो ये product क्यों देना है? Is it only the packaging that is different? And I think since you guys have made the first move to be here and really evaluate this offering, let me tell you first of all that the kind of clients that you are focusing, it starts at the basic behavior. If somebody has a potential of cutting in 1 crore, 2 crore, 5 crore, 10 crore, 25 crore check, he is not going to be wanting to participate in something that everybody participates. That is first. Second, it's become a very crowded space. right? 2017, I think we had all put together about 40 managers, including AIFs and PMSs. Today, I think we have upwards of 500 schemes, if I'm not wrong. I don't know. I think the managers would be about 250 plus, approximately. Uh, and to be very honest, I think when something becomes so crowded, people compete for the final mile, which is returns. That's not the game. The game is to balance risk. The game is to be able to provide diversification. So let me, since Ananya and Aparna have already talked about the various, kind of products, let me tell you and start with something as basic as the listed equities, category 3, right? The category 3 can also be, in different formats. But let me start by saying that where the regulator started regimenting mutual funds and made categories, the challenges for a asset manager to break out and be able to buy opportunities which are underrepresented and hence underowned is very minimal. Think about an example. Healthcare. Healthcare shows itself as 6% in NSE 500. Do you think that's all the allocation that you need to be able to access an opportunity healthcare? Answer is no. Go back to when the RERA became formalized. Can anybody guess? I mean, Romit was asking a question. Let me ask a question. Would anybody of us know what was the representation of real estate as a segment in the index when RERA got formalized? Anybody? No, it was it was a little more than zero. It was about 1.3%. But look at what it has done post that. So essentially, what I'm trying to say is underrepresented, underowned opportunities. Obviously, not without not saying that you should go without due diligence, but underrepresented, underowned opportunities by a qualified manager with a very clear determination to deliver alpha is what category 3 AIFs can provide, right? But yes, you will have to do your due diligence and be able to find those managers. I think we were talking about it since morning, and I firmly believe for once that all of us here, at least the people who are not managing money directly as a fund manager, are essentially risk managers. So if you are clear about that part, and if you believe that the only free lunch that all of us have is diversification, category 3 products and PMS products with very, very clearly defined objectives can create their diversification for you. Moving on to category 2, I think Aparna put it very, very beautifully. Ananya talked about it. Think about it, the source of funding has moved. Banks are not forming the largest part of funding specifically for mid and small segment of corporates, right? And if you can replace your source of fundings through a formalized fund route, which gives you the time that you need exactly for those kind of funds, you're also able to part with handsome returns, right? I don't want to put a number to it, but if you break it down, I think the IRRs are very, very healthy double-digit numbers. And I don't think in any other regimented space you can really provide those kind of returns in the fixed income proportion. Think about private equities, right? And I would in fact encourage you to look at it from a very different standpoint. All of us have gone through a long evolution where information arbitrage used to be the biggest lever. Fund managers used to claim we have information arbitrage. There's no information arbitrage now. So if you really want information arbitrage, it's in private equity. And hence that is where the highest source of alpha comes in. So what I've tried is to tell you to think about it differently, try to think about the due diligence part of it very differently. And let me tell you, I think not only is the space literally compounding at a very, very healthy pace, I think amount of innovation and more so the amount of regulation that is coming in is something that will help all of us expand better in this opportunity.
In fact, very rightly said, Abhishek. And I think why you should also start focusing on the listed spaces, because that is what you know. And since the public data are also available now, you can verify those data and you can validate those data. Because when somebody talks about unlisted or private credit, you need to come to me to learn about it. But when it comes to listed entities, there is already an amount of knowledge which is already there in your, in yourself. So I think relating it. Yes, Anna, if you want to add something.
I just want to add in a very simple manner. What is holding back many of you to do a talk, even if Romit sends it, is nothing but fear. डर जो आप लोगों में है कि पता नहीं ये कौन सा एनिमल है जो हमने अगर छू दिया तो पता नहीं क्या कर देगा. यही सोच थी आज से कुछ 20 साल पहले म्यूचुअल फंड को लेके भी. When people were very happy, आप FD ले लो सर कोई बात नहीं, RBI बॉन्ड ले लो कोई बात नहीं, म्यूचुअल फंड मत पूछो हमसे, आप पूछो लार्ज कैप, हमें पता नहीं लार्ज कैप होता क्या है. यही प्रॉब्लम आज भी है. कोई पूछेगा टैक्सेशन का क्या होने वाला, पता नहीं. वो पता है क्यों नहीं है, पता नहीं, बिकॉज वी आर नॉट रेडी टू मूव लिटिल बिट मोर टू टेक द नॉलेज, upskill ourselves, which is what this forum is all about, and get this inertia out of our mind. Please appreciate the very fact there are few things in the life which are inevitable. Change is one of them. हमें बदलना पड़ेगा, अपनी सोच को बदलनी पड़ेगी. And lovely, I'm telling you, beautifully, as you would have seen, the 52% is a CAGR for the alternates. This is the reality of life. You cannot ignore.
Very true, Arun. If you don't sell it, somebody else will sell it. Simple. Life starts and ends there. So, I'll come to you, Samir. You come from a very, company that is known for institutional, advisory and thing. So, how do you see HNIs or that segment, ultra HNI, family offices, and so-called the super rich class, which is emerging? How are they responding to AIFs? Because these distributors eventually have created a lot of wealth for their clients, unknowingly, knowingly, consciously, unconsciously. A guy who was at 1 crore 1 year, 10 years back, now he's at 7, 18, 10, 15 crores. So coming from a very focused house who is into managing institutional money, treasury money, and those kind, where do you see the excitement happening in that segment?
Good afternoon, everybody. So, I will take this question in two parts, right? And first, as we all agree that we are at the cusp of unprecedented economic growth. And as we target $35 trillion economy by 2047, AIFs will definitely play a major role. And all these three segments which you mentioned, HNI, ultra HNI, and family offices, they have emerged stronger, and collectively they are contributing towards the growth of this sector. Now, definitely, the enablers are product innovation. You can say awareness about the alternate financial product, which just now my other panelists have covered. And also, enabling regulatory framework which has emerged over the last few years. And coupled with a very strong distribution network. You people are here, you are a part of this. And all these things have helped these three segments to contribute massively towards the alternative investment fund. Now, just to give a sense of the growth which has happened over the last few years, the AUM has gone tenfold, and as Aparna has said, it's gone to 12 lakh crore. And I was just talking to someone during the break that in 2013, this was like, unknown segment for HNIs, ultra HNIs and family office. It was unheard of. And in terms of the number of funds, we could count them on the fingers. There were, only 9 Cat 1 funds. I remember 19 Cat 2 and roughly around 6 or 7 Cat 3 funds. Today you can keep on counting in your hand.
Do you know how many numbers of AIFs in this country currently?
Yeah.
Any idea? Huh?
Yeah, number of...
Total number of SEBI registered alternate investment funds in India. Can anybody tell me? How many mutual funds are there? How many AIFs do you know? 1500. 1500 registered AIFs are India mein. And they are all sustaining. So don't think that बहुत बड़ा इंडस्ट्री है, इसमें अपॉर्चुनिटी नहीं है, आई एम गेटिंग कंफ्यूज. इट्स ऑल इन योर माइंड. मैं आपको फिर से बता रहा हूँ. So there are 1500, Samir. Just because you said 9 and 1, so I told you this 1500 registered AIFs in this country. Sorry.
No, so that's amazing growth which has happened. And as an institution, as an organization, we are seeing huge demand from ultra HNI and family offices. And family offices definitely have also grown in size. And ultra HNIs, they have basically now moved from venture capital to a private equity spectrum to this particular opportunity which is there. And this pre-tax return to investors in their hand through private credit especially, it's in the range of 13.5% to 14%, which is phenomenal post of all expenses, which I think it's a targeted return, but it's a good return to have, I think. Yeah.
Brilliant, Samir. So one of the few words, because I am a trainer and I am also a business. There's a one term, whenever I sell to people, people come. That's Gift City. Gift City has now become a very big business opportunity for me. Whenever I say मैं Gift City का training करवाऊंगा ना, 100 लोग आ जाते हैं. So question to you, Nagesh. We are seeing a lot of inbound and outbound businesses. Indians by definition is healthy. Indians मतलब बहुत पैसा है अभिषेक, बहुत पैसा है. मतलब my friends in Dubai, they also tell me. So question is very clear. Is there an opportunity there or सिर्फ हवा में कुछ चल रहा है? मतलब
Good afternoon all. I think thanks Romit for having us here. This is one question which we always face कि opportunity है या नहीं है. I think the answer is very simple. There's a tremendous opportunity as far as attracting money into India is concerned. I think India continues to be a magnet as far as attracting offshore money today is concerned. I was just couple of days back in one tier 3 city and I was astonished to see the kind of money that one single IFA was able to pull from countries like UK, countries like Kenya. And if I have to put a number, there were more than 70 applications which he could pick up in an alternate PMS and AIF both put together. And this was pure offshore money. Talk to any investor. I think we were doing some calls with some US investor. What we found was very interesting that, these are like highly educated doctors, engineers who are based out of US. And there is a FOMO impact which we are finding it with all these people. Wherever you go, they feel that they could have missed India and they want to participate in India. I think the opportunity is tremendous. Now, as far as investing in India is concerned, I think there are two routes to invest. One is, of course, you can come through your NRE, NRO account, and the other is the dollar-denominated investments which we talk about. Okay. If an investor wants to invest, he can invest through his NRE, NRO account, which is there. Of course, that is something which Ananya just spoke about. But as far as dollar investments is concerned, that is something which is really, which is catching pace currently. This is something which is getting a lot of mindshare today. And to answer what Romit just asked, there are a lot of platforms which are available. There is a platform which is UCITS. There is a platform which is based out of Mauritius. There is a Gift City platform. All these are platforms through which you can actually get your offshore investors to invest into India today. I think, for example, at MK Investment Managers, we operate a fund called MK Bharat Fund, which is based out of Mauritius. Similar way, there are various entities which are available in the Gift City platform. And you can actually invest without many hassles of documentation, which Ananya just spoke about also. But if you're looking at a dollar-denominated fund, there are hardly any documents which are required from a customer. And the most important document is that you don't need a PAN card to invest as far as the dollar-denominated fund is concerned in India today. Minimum ticket size also is something which is very attractive. I think $100,000, $1 lakh is something which is required. And any customer who has a dollar account, I think can definitely look at investing into India. So I think opportunity is phenomenal. We just need to tap into that particular opportunity. Every investor that we talk to at this point in time feel that they have missed India. They want to invest into India. It's just about reaching the right customer with this kind of products which are available. So opportunity is phenomenal. Rohit.
In fact, just to add you, a lot of you have attended my Gift City sessions. There are a lot of people, right? Yeah. So since I'm into training, I am talking to 3 very large wealth management firms in US and Canada with a combined investment value of $1.1 billion to invest in India. They want to get trained on the Indian market regulations, and they are appointing me as one of their trainer, or you can say a coach. So this numbers is mind-blowing, big. And just because your investors or your family people who are already investing in India, but उनको पता नहीं कि आप ये करते हो, that is why they are restricting. And I think with the recent budget, where the finance minister has given an open numbers to launch a retail fund management entity, we will not be very far when we will have $100 SIP to attract foreign investment. So, now we are the last few minutes, Anunay. These are all distributors. Obviously, there are some few friends who represent the family offices, but you can take them into confidence. They are all, so-called, our people. So, mutual funds earnings is getting marginalized, correct? And alternates can be looked upon as an, so-called that earnings piece. So how is a structure of, we don't need to now disclose numbers, but what are the earning capability for a distributors vis-a-vis other traditional product? And this is for you and Aparna, both.
Very interesting question. And this takes me back around 10 odd years when I was in one of these platforms, and I made a war and I got very badly trolled when I said that, boss, learn to get your margins stay around 75 bips. And people said, man, तू हमारे साथ है कि हमारे against है? हम लोग 150 bips बना रहे हैं, हम उस समय 225 मिलता था, अब तू बात कर रहा है 75. But today is the reality. 75 बन चुका है. I'm even telling you that get prepared to see the number being at 35. But then 35 to 40 is the number. It never goes to zero. ऐसा नहीं होता कि मैं हर 5 साल पे आके बोलूँगा कम eventually will be zero. Zero कभी नहीं होता. Even liquid fund में भी 2 पैसा बना लेते हैं आप. So it never goes to zero. But the fact is that's the trend line, and it's not happening because people are getting smarter. It's also happening because economies of scales are coming in picture. And as the economies of scales comes in, your unit cost has to come down, which is what is happening now. Now, smartly, when we talk about it, so there are 2 ways to look at everything as we talk about the client's portfolio and how the asset allocations are supposed to be happening. And now in the closed room, and don't quote me anywhere, we also need to look at our own economics, how the economics also have to work on. So, and that's what exactly Romit wants me to comment on. So to me, I think, undoubtedly, alternate assets and the PMSs helps you actually in 2 ways. One is, because of this entire barrier of a 5 million or 10 million, 50 lakh और 1 crore का जो barrier है, पहला काम तो ये करता है client को दिमाग में घुस जाता है इससे कम तुम दे नहीं सकते. Even if client has a 5 crore, you go and tell him, sir, एक mutual fund है, he will ask you, what is this minimum amount? You tell him, sir, actually you can start with 2,000 rupees also. If so, एक काम कर, you take 5 lakh and we will build it. वो build up होता ही रहता है फिर. So first of all, the moment you open yourself with an AIF and a PMS, you get a certain commitment. So that bit of money you are certainly getting in. B, on a retrocession basis, obviously it helps you because you have a better, because the fees is such and a certain percentage of fee gets shared with you, so you obviously can work on better. But looking at not our balance sheet but a client's portfolio, I would strongly believe that between 20 to 25% of the client's portfolio, depending upon if he belongs to a category that he can afford to own alternate assets, should be in the client's portfolio for sure, because the kind of variance that you can get through this space is huge. And now the innovation, the way it is coming in, for example, we are going to be introducing, wherein one of the biggest challenge of a CAT 2 unlisted being the liquidity and accessibility. So अगर आपने CAT 2 में पैसा डाला, तो आपको 6-6.5 साल तो रुकना ही पड़ेगा, because that's the time that stock would take for it to get mature. You know, we are coming with a fund, maybe next week I'll launch that, which is I'm giving you in a Cat 3 with no lock-in, both listed and private equity. Now, these are the things which is where the industry is progressing. Now, just come out of that mindset and start capitalizing on them. It's going to work on both the sides, client as well as yourself.
Brilliant. Yeah, Aparna, your thought?
So is alternate really an alternate right now? I don't think so. I mean, the way my panelists here have shared their thoughts, it's not going to be an alternate. I mean, you will have to look at this as a category, for your client's allocation, like Romit also mentioned, because investors are embracing this category. So one thing is that, and obviously, like Ananya highlighted very well, in terms of the way things are shaping up and the way things, the journey of, evolution in terms of margins has happened. I think so that's another interesting thing to look at, specifically in category 2, which is closed-ended. So you as distributors, when you're coming in, there's a defined time period. So there's a defined time period for your earnings. And when I'm saying this, if we look at the mutual fund listed equities data, only 54% of the assets are held by investors for over 2 years. So, we are long-term in our thought process, but when it comes to actual journey, I think most investors track it long-term, but act on a short-term basis. So that's where visibility also is stronger specifically when you're taking part in the category 2 space. I just wanted to leave that part.
So category 2 makes more money for you. So that's simply what she's going to say. But let me give you, because again, I'm a teacher and I don't endorse any brand. That's a disclaimer. I only ensures that you understand the subjects very clearly. One of the basic for you as a distributor here, one of the prime factors is a participation in the company's valuation. When the company keeps making money, you also get a part of it. So when you have an unlisted space and you talk about 300x or a 400x kind of a return, what's in it for me? मैंने क्या बनाया? मैंने तो 2% ही बनाया. So alternates is one of such areas where you can actually work with your clients, not to make money for the clients, also for to you. Okay. So take this as a next diversification in your business. Now I'll come to Abhishek and Samir. We are running out of time, but yes, we can stretch, for 2-3 minutes. So how much is regulation? Because you all have a mutual fund business, you are into broking, which is heavily, regulated. How is regulations going to help them going forward? What do you see as a principal, as a regulated entity? Because there are so many funds, everybody coming and claiming themselves to be a fund manager, and I see, what is the regulatory landscape shaping up? How is it?
Okay, so I'll draw upon what we have all, सबने म्यूचुअल फंड का इवोल्यूशन देखा है, राइट? अभी सबसे ज्यादा पॉपुलर लाइन क्या है?
म्यूचुअल फंड सही है.
म्यूचुअल फंड सही है. हुआ क्यों? ओके, सो लेट मी गिव यू अ क्विक क्यू. हुआ इसलिए क्योंकि रेगुलेटर खड़ा था और बोला आप चिंता मत करो, पैसा लगाओ, इट्स सेफ, राइट? हाउ डिड दे अचीव इट? ट्रांसपेरेंसी, रिपोर्टिंग, राइट? In times of crisis, they were standing by. To be very honest, I think, Romit, very, very relevant question, because to be very honest, for a long period of time, I think, even Ananya talked about it some time back, the fear psychosis was coming because transparency नहीं था. हमको पता नहीं था कौन क्या मैनेज कर रहा है और capability है कि नहीं है. So, in the interest of time, if I have to take 3 broad guidelines from a regulatory perspective, the regulator is focusing on clarity, which is building transparency, right? He's focusing on compliance, which means institutionalization of process, right? And he's focusing on capability, right? And I think अगर आप सोचेंगे तो ये तीनों के तीनों जो वेक्टर हैं बहुत ही इंपॉर्टेंट और बहुत ही सेंट्रिक हैं, because it's a business of trust. So I would say the regulator has already embarked on it. I think things are going in the right direction. There are obviously clients here who invest into alternates and they have far more amount of transparency and focus than they had before. I would just say that this is the time you should embrace it.
Samir, few minutes.
Yeah, sure. I think what my panelist has just mentioned, that transparency and other stuff. Few of the regulation which has actually led to the growth of AIF. If I have to put it in, if you see the measures which has happened. Portfolio valuation earlier was done by the AIF itself. Now it has to be done through independent valuer. That is one. Second, there is a performance benchmarking now for all AIF. Third, there is norms for liquidation as well, and mandatory dematerialization of AIF unit. These are small things which SEBI has done. AIF audit is happening now, which was unheard of earlier. There is a ring fencing of all the assets and liabilities for each scheme. There is no overlap. Even if you are having different strategies, each scheme are having a separate, ring fencing. And earlier, co-investment was given left, right, and center to investors. Today, SEBI has again clamped down, saying that it has to be at equal terms for the fund. So, SEBI has stepped up the monitoring of AIF, A, and B, also the measures which they have adopted. This has definitely brought a lot of transparency in the system and has also led to growth of the AIF in the country.
So while we are almost close to it, I'll just give you 15 seconds each. Now we are known for being a Gurukul where people comes for training. No unbiased answer. What can they look from you in order to empower them? No product selling, nothing. What can we do for them so that they become a knowledgeable, skilled, competent alternate distributor?
I will sum up it in one line only, which is walk the talk. I think the best way to learn is when you see it happening in front of you. So, call us. We will come along with you on the joint calls and you will understand what it would all mean to.
Super. I think that's one of the biggest support. I think, you should, because you need to learn, and when they teach you, you will learn it. Abhishek, what?
So, our learning over the last year or so has been that we have done a lot of training interventions. And I think one of the reasons with participating with the AFM was we wanted to institutionalize that. Because हो सकता है हम लोग एक category में हों, but when it comes to education, you have to be with platforms who can teach you the entire length and breadth. So that is one thing. And obviously, as Ananya said, we have bifurcated our teams. There's a focus on alternates separately. And hence, there are people who can help you close accounts, work with you in terms of understanding, reporting, and things like that.
So yeah, I think both of you have summed it up,
No, but before Aparna takes it, let me tell you, before Aparna you takes it over, let me tell you, when I started my training business, Access AMC was the first AMC who actually Axis ASK, were the two AMCs who actually unconditionally started off with. So I'm thankful to Axis and ASK for supporting me to bring it where we are today. So for a big clap from my side for Access and ASK. Yes, Aparna, please go ahead.
Yeah. So obviously, along with AMC support, which obviously is going to be there, that we can come on joint calls, we can come and ensure that awareness is created about each of these things. I think platforms like AIFM also become very, very important because there's a continuity. So, with this particular platform, I've seen this continuity. It's not like event ki baat bhi hai. So, there's a regular engagement. I think once you start on that journey, then you're going to end up somewhere. So that's where I wanted to leave you.
So continuity, on 20th, we are doing a full-fledged 3-hour sessions on private credit. And it's complimentary, free, come, attend. And you will have a complete product knowledge, no product positioning. And we will have among them who is going to come and also add there. So 20th, between 5 to 8, we'll have our master class only on private credit. Ye private credit hai kya? Samir, 10 seconds.
Yeah, tough. After,
I think Nupur can answer it.
So,
he is a distributor. Nupur, you want to help him? Huh?
I think all the panelists have already covered. So do.
Hum bhi karenge.
So yeah, but besides that, I would like to add, as an organization, what we are doing. As you mentioned, we are a broking house. We have now evolved with time to wealth management and now to asset management. PL Capital now have successfully launched the performing credit fund as well. And we are enabling all our distributors and panelists here to basically cater to their clients with another alternative product. That's the growth and evolution which we had, and we would like to partner with you on that.
Thank you so much. Nagesh, offshore, give city, give city, give city.
No, that's the challenge when you're speaking the last. But I'll also say, and I've always been mentioning this to all, that the success for any product to be sold is joint calls. And I can commit, all of you are sitting in this room, that we are just a shout away. You can call us anytime. We'll be more than happy to come on a joint call and do it, because I always mention this everywhere that jo dikhta hai wo bikta hai. So we'll be more than happy to come and do calls with you as and when it is required. Whether it is a gift city product which will need hand holding, whether it's a PMS or a AIF, we are more than happy to assist you.
Thank you so much. We will take questions. Just give me 2 minutes to wrap it up, because we are already running out of time for lunch. So thank you very much. I think we just have started. The journey has started. Again, a Sunday afternoon, lunch delayed by 30 minutes. Abhishek Ananya speaks a lot of things about the curiosity. So, wish you all the best. And if you've got any questions, 1 or 2 questions is good enough. Dimple, if you allow it.
Okay, that side, the hand is raised. We can have
Please.
that question.
Yeah. Acha, before that, no complaint, please. Because a lot of time people take this forum as a complaint, so no complaint, only inputs and suggestions. Yeah, Nilesh, please go ahead.
Description. It's a start of the AIF, the startup companies and credit, and my clip shot is all the sweets going on there. Is no doubt it's going away. My question, as a MFD or a financial product distributor, the MFDs are small. 1 crore ticket size is a investor of HNI 5 crore size. I want to know that one red flag. I want to want that salt and spice that we have to look in the funds that might go wrong. That will give not at least 5-10% of the return on the capital, or it will come below the capital. What will be chances of the Cat 1, Cat 2, Cat 3 category products? We have to look after that, because losing that 1 CR investor is a huge chunk for MFDs or investors. So I want to look for one flag, red flag. Is not right now might be there, but in future we have to look for that one red flag where we have to look for, and we will say.
Great, sir. Let me attempt it. See, if you are in an asset class where you are carrying the risk, whether it is a market-related risk, it's a credit risk, it's a liquidity risk. The risks are there. You cannot avoid that. What you should be looking at, how well you are able to ring fence them. Let me give you a classic example, and I think that should sum up your question. I think NSE, we all know. I think for the last 5 years, every year we say NSE's listing will happen. It hasn't. Does it carry a liquidity risk? Answer is yes. What if I have a private equity fund which has got an NSE now? Tomorrow I have to shut the fund, I have to return the money back to you. But I don't know what do I do, because it has got an NSE not listed. So, sir, these risks are always there. Second thing, it is not 0 and 100 game. If you have given 1 crore, that doesn't mean if something has gone wrong, that your 1 will become 0. Sir, in any fund, you have occupancy between 15, 20, 25 ideas or strategies or securities. Things can go right, things can go wrong, but that is happening on the listed side also. Tell me, had you ever thought of Satyam happening? Satyam happened. So these risks are always going to stay. But can they be the deterrent for you to think of, I shouldn't be stepping in? I don't think that's the right approach. The right approach is to see, your job is to find the right manager, the manager who is a part of a better ecosystem. The ecosystem which has demonstrated success, have grown in size, and obviously is getting well regulated. Then I think your job is done, sir.
And after that, come to AIFM to get yourself knowledge, certified and trained. So thank you so much. And I think we have, this can continue. I can see the kind of, participations. We can continue till the evening. There are a lot of questions, but yes, these people are all there. So please connect with them personally if you want to engage more. Over to you, Deepti.
Thank you so much, Romit sir, for such a wonderful moderation of a powerful panel, and all the panelists have been very kind, very generous, and they have, given us wonderful insights on the topic. I think the collaboration, the joint calls that we are saying and upskilling that, the panelists are saying, we're all here for the same. Are we here for collaborations, networking, and learning? And how was the first half for all of you? It has to be louder. I think the panelists and the speakers are more energetic than you. So how was the first half of the day? Great. And I think we are demystifying and decoding and simplifying the concept of alternates. Yes, are we? Yes. Thank you so much. Thank you to all the esteemed panelists for being here and making this occasion really graceful. I request Mr. Vyas to please come and present the memento and the token of appreciation to all the guests here.